Hi, everybody. This is Miguel Solar, Remax Real Estate. Welcome to the First Take series. I came up with First Take because we're not pausing. We're not going to reset. We're just going straight into a live video here, and you're going to see some bloopers and mistakes and word fumbles, and that's just part of life. So I wanted to bring you this video information and introduce you a longtime friend and lender in the community here who's been doing loans for well over a decade. Steve, will you go ahead and introduce yourself?
How you doing? Good afternoon, everyone. Steve Tampus here with Augusta Financial. Been in business since 2002. Been working with Miguel since then. Longtime friends, Miguel and I.
Yeah, long time, back in the high school days. So, Steve, what I wanted to bring up here, and if my clients who are watching this and people that know me, I'm not pretty good. I'm good at calling everybody 2 to 3 to 4 times a year. At minimum, you're going to get a phone call twice a year from me, just depending how busy we are. And what I do in those phone calls is I'm updating you on opportunities in real estate. I'm sharing with you what's going on with market values. And by the way, there's going to be future videos where I'm going to be sharing with you what's happening with market values today during this pandemic. Okay. And you'll be surprised to hear what's going on there. But for the most part, I just like to communicate with my clients and just share good information. And that's what this video is all about. Today, I want to talk to everybody about interest rates. And you probably received a phone call from me over the last couple of years on interest rates, and it's time to refinance because it's part of your real estate portfolio, right? There is no reason to be paying more interest or a higher payment on your home today when you could actually refinance. Okay. So Steve, here, I'm going to just lead some questions here. Sure. And I want to ask you real quick. A couple of years ago, I know that the rates were a little bit higher, even as far as 2018, right from about June to December. And what were the rates right around that time for anybody who bought?
Someone was looking somewhere in the mid-4 range.
Mid-4 range.
Mid to high 4 range, yeah.
And I even seen it get really close to 5. I think one time I spoke with a lender that quoted a 5%, and I said, oh boy, if you're buying a house, I wouldn't talk to that guy. But I know the rates kind of fluctuate. What can you tell us about rates today? Right now, it's April, is it the 22nd? It's the 22nd, I believe. Yep, it's the 22nd. And what can you say about rates today? And I know they fluctuate, especially because of the pandemic. Where are we at with rates?
Rates are doing really good right now. They're doing actually really, really good. Rates below 510,000, your conforming loan limits are going to be quoted somewhere between 3.25 to 3.375.
Say that again, 3 point what?
25%.
Okay. And as high as?
As high as 3.375.
3.375. So conforming loan amounts, Steve, what's the tier of money lent on that? 500 and something?
It's 510, 400 or below.
510,000 and below. So if you have a loan that's below 510,400, then you're going to qualify. Then you'll get the lower tier of interest rates.
Correct.
Now, how high do they go? There's the in-between price point, and then we got jumbo. What's jumbo all about?
Jumbo, which used to be called jumbo, is now called high balance conforming. Okay. So anything above 510 to 765 is in a little small window called high balance conforming. And those interest rates with 1 point, you're looking at 3.875.
3.875. Okay.
With 1 point up front, buy down.
1 point up front. And so when we talk about points, I know points didn't exist 3, 4, 5, 6 months ago. Tell us about why we're seeing points today.
There's just not a big appetite right now in the secondary market. There's so much uncertainty with what's going on in the financial market. Okay. And you're seeing it every single day. So that window of the high balance window right now with FHA, VA, and also conforming are a little riskier on the secondary side. So what investors are having you do is pay up front. There's so many overlays.
So there's a cost.
There's a cost
to get these type of loans. And that can change and I know things are changing.
It changed on us.
Right?
Yeah, it changed on us within a 2-week window. It changed.
Yeah. Okay. So 2 weeks from now, 30 days from now, if you're watching this, that completely could be gone. So with a great professional, if you're refinancing, if you're purchasing, timing's everything. If you see that perfect house that you're looking for, you're not going to wait around for the rates to change. You could always, how long do you recommend people wait before they refinance? Is it 3 months? Is it 6 months?
Well, it really just depends on where they're at, Miguel. A couple of things have happened that I've seen, I've noticed. Fannie Mae and Freddie Mac went to where they'll do an automatic, like a property inspection waiver.
Okay.
So I'm seeing people that bought 6 months ago being able to increase their value off this inspection waiver and get a better interest rate because of loan to value. So I would just say,
because the property values have shot up over the last 6 months.
well, I think property values have done well. If you take away what's been going on this last 6 weeks, I think values have been doing very well. I think we'll actually finish really strong going toward the end of the year as well.
You know, I couldn't agree with you more. And I've been doing some studies and research, and I've been watching a podcast. I mean, I've been on more Zoom meetings than I've ever had in my life. And what I've seen is, you know, there's a lot of talk about the third quarter and the fourth quarter. This is a V-shaped type of recovery. We're going to get, economy. This has nothing to do with the house, but the economy is going to go down, the recession, and then we're going to see a bounce back. We're going to see unemployment drop by half by next year. And so it sounds to me like there's a lot of upside, and I know that the government's trying to get the economy started.
Yeah.
Steve, let me ask you this question. And if somebody needs to refinance and just they're temporarily out of work, what do you recommend? In other words, if they don't have paychecks to show.
It's difficult right now. One of the issues we're having right now is when people are on hiatus,
okay,
or they are taking a leave. There is no opportunity.
A leave, hiatus, they're temporary.
So we're even on clients that we've had had to put whole files on hold because they were employed, and as of like April 1st, they went on a hiatus for the next 30 days. So we would just put them in queue, wouldn't basically work on the file, but wouldn't fund them until they would be back at work and got the first paycheck back.
Okay, so financing's not available, but it sounds to me like you recommend is perhaps getting the application in, having everything set, check the background on credit, see if there's any debts there that are concerning or maybe even not theirs. And at that point, just get back on, just wait till they get back on work. It sounds like we're all going to go to back, slowly rolling back to work in the next 30, hopefully sooner, 2 weeks to 30 days to 45 days, depending what industry you're in. And at that point, how many pay stubs do they need to, as far as you know today, how many pay stubs do they need to get a loan?
One pay stub.
One pay
really
stub.
What it comes down to is when we do our final call at funding, they just need to verify employment.
Okay, so they need to verify employment means what?
We have a third party company that will call and verify that they are currently employed and currently working.
Okay, so temporary, we're seeing some people on shutdown. There's not really a move they can make, but they can queue themselves up to take advantage of a refinance. Should they have rates that are higher than, say, 3.75, 3.875?
If you're over 3.75, it's definitely worth a call.
I've talked to clients, Steve, that have 4 point something, and a gentleman that had 5.25. And I've called and shared with everybody, hey, it's time to refinance. And I think now we're getting people to really pay attention to that, especially as we're really shaving off the fat in our expenses, finding ways to decrease the monthly outlay that we have on a monthly basis. So, hey, Steve,
Miguel,
yeah, go ahead.
Go ahead. I think there's a lot of opportunity with what information you're giving them, even with someone in that range. Because 6 months ago, some of these loans that we were quoting were about 4.125.
Wow. Yeah.
So there's big, obviously, opportunity right now going if you're in the market to look at a refinance. But if you are over that 3.75, I definitely tell you to take a few minutes to get some information on maybe doing a refinance.
Steve, what number can the folks that are watching this video, podcast, whatever we want to call these things, I'm sure I'll figure a better way to say that next time, but what number can they reach you at?
Yeah, you can reach me at 661-755-2600.
755-2600. I love that number, man. It's really easy to remember and dial on the phone. Hey, Steve, I know you're busy. I know that the refinance market has been over the top for many lenders around our country. And so I appreciate the time you're taking to just share a little bit of your knowledge and get these out to people who perhaps not sure what they can do or especially during this time. So appreciate your time. Stay healthy, stay safe. Everyone out there watching the video, stay healthy, stay safe. And I'll be producing more of these little short videos for you. in the next weeks and the next days. Appreciate your
Awesome.
time.
Thank you for the invite.
You bet, Steve. Thank you, buddy.